Good morning. The subcommittee will come to order. I thank everyone for joining us this morning. I want to especially thank the witnesses for being here today. America's small businesses are a catalyst for creating employment opportunities and driving growth in the U.S. economy. That is because 30 million small firms in the U.S. represent over 99% of all employers and support nearly 56 million jobs. That is why we need to be enacting policies that help small businesses deliver the products, services, jobs, innovation, and income that Americans rely on. One way for Congress to support small businesses is through well-conceived and targeted tax policy. In my short time in Congress and on this committee, I've heard that small firms need tax policy that is simple and certain, along with policies that level the playing field and create opportunities not just for Wall Street, but for Main Streets across the country to thrive. The federal government plays an important role in the setting tax policies, and I've seen firsthand back home now the changes in the SALT deductions has negatively impacted home ownership in my district in New Jersey, and however, tax laws enacted by states and local jurisdictions also have an impact on small businesses, especially as economy becomes more interconnected. New Jersey has a fairly simple sales tax system. The state charges a uniform state sales tax of 6.625%, and we do not have local sales taxes. Other states choose to do things differently. Texas, for example, has 1,594 sales tax jurisdictions. Nationwide, according to the Tax Foundation, there are 10,769 state and local tax jurisdictions. This is a critically important issue for small businesses selling their goods and services online and for millions of others that are engaging in interstate commerce. In the United States Supreme Court's landmark 2018 decision in South Dakota v. Wayfair, the court determined that the states could collect sales tax from out-of-state sellers. The decision overruled a 51-year-old precedent which established that states could only collect sales taxes from businesses that had brick-and-mortar locations in the state. Even the businesses that sell on Amazon, which collects and remits state sales taxes for small businesses, do not collect local sales taxes, leaving small businesses to collect and remit local taxes in thousands of jurisdictions across the country. While sales taxes are an important source of revenue for the state and local governments to build roads, maintain parks, and pay teachers, police officers, and firefighters, but small business owners should not be the collection arm for thousands of taxing jurisdictions. Small businesses simply do not have the time and the resources to do so. Let's also be clear, this is not a tax avoidance issue. Small business owners want to follow the law, but they need clear rules of the road. The landscape post-Wayfair is that millions of small businesses are unfairly faced with overwhelming and expensive compliance burdens. These burdens unfairly limit the ability of small business owners to offer their products and services across state lines. I've heard from numerous companies in my own district about the heavy financial burdens that they faced in the aftermath of the Wayfair decision. One company I'd like to highlight today is the International Products Corporation, a small company that manufactures precision cleaners and assembly lubricants in Burlington, New Jersey. William Herbert, the CFO of the company who has submitted written testimony for today's hearing, has spent thousands of dollars just to account for many different tax jurisdictions within which they sell their products. Not only this, but he has had to personally spend a couple days each month calculating and filing the returns in each state. Despite the significant costs his company incurred for compliance, they ultimately paid only $958 in total taxes to other jurisdictions last year. It seems downright unfair to put such burdens on our small businesses. That is why today's hearing is so important. This is the first hearing in Congress to solely focus on the small business impacts of the Wayfair decision. We need to shed light on the problems that the Wayfair decision has created for small businesses and explore some actions that Congress can take to bring much-needed relief. It should be possible for state and local governments to collect the revenue that pay for the public services we rely on without imposing excessive compliance costs on small businesses. It is my hope that this hearing will allow the voices of small business owners to be heard. I also hope that this hearing will serve as a springboard for members of Congress to work together to solve this issue together. This is not just an issue in my state, but it is an issue for all small business owners across the country. I'd now like to yield to Ranking Member Hearn for his opening statement.
Thank you, Mr. Chairman. Thanks to witnesses for being here today. You know, as a small business owner for the last 35 years and 17 years on bank boards, small community bank, 13 years as McDonald's leadership team, representing over the 3,500 franchisees that pay multiple taxes in multiple jurisdictions. Even in my own organization, 23 restaurants, 23 different communities, multiple tax issues from city to state to county, and the feds, and all the different things that go on. It's a challenge. 5 years on the systems economic team, I got to see this firsthand, the impact. 5 years on the McDonald's tax policy team, and many years on the McDonald's insurance company board. So I'm sort of a unique position to be on this committee and the ranking member to know what happens in small business. Again, multiple businesses across multiple jurisdictions. It's always a challenge for the small businessmen and women who are trying to, put their ideas to work, find capital, and create jobs and put Americans to work. The chairman and I work well together to ensure small businesses operate in an economic and tax environment that allow them to grow and expand and create jobs. Beyond my background, though, I'm also a firm believer in our 10th Amendment, the Constitution that says the states can do it better than we can in Washington, D.C. And so I think it's also that we find that right balance to have a vitally important, thriving democracy. This hearing will combine many of these elements together. With the explosive growth of the internet in this country, small businesses are building the next great product and creating the next great service in ways that prior generations have never imagined. Being connected to the web has also introduced novel ways to reach new customers. And while catalog companies started to chip away at proximity barriers, the internet and e-commerce sites have completely leveled any roadblocks. With new customers in new location, the question of taxes has become instrumental not only for businesses, but also states across the country. For years, sales tax jurisdiction questions were answered by U.S. Supreme Court cases, including Bella Hess versus Illinois in '67 and Quill versus North Dakota in '92. These cases, which focused on companies' physical presence, were the long-held standards for decades. As e-commerce grew and matured, sales tax jurisdictional questions became even more instrumental. At today's hearings, we're going to be discussing the impact of Supreme Court's most recent decision, South Dakota versus Wayfair. Specifically, we're going to be hearing how the Wayfair decision has impacted and affected small businesses across this country. Our nation's smallest firms create nearly 70% of new private sector jobs in America. Small businesses, entrepreneurs, and startups are transforming neighborhoods and communities from my state of Oklahoma to Minnesota and beyond. And while driving the country's economic engine forward, these small businesses often operate with limited staff and resources. This hearing will explore how these job creators have reacted to the duly rights of states to enact sales tax requirements for remote sellers after the Wayfair decision. Again, I want to thank each of you for being here today and join us in this conversation. And as I mentioned earlier, we know that you have limited staff, so we appreciate you for taking your time to be here today to talk to us about this very important issue. Your thoughts and comments on this matter and all matters within our economy are instrumental. With that, Mr. Chairman, I yield back.
Thank you, Mr. Hearn. I always have to say it's been great being able to do this in a partnership with the ranking member, having the opportunity for us to work together across the aisle, very much committed together on just trying to do what we can to help small businesses, cut through some of the bureaucracy and the red tape and the difficulties that they've had while pursuing a level of just fairness across the board. And that's exactly what he just said in his statement. What we're trying to figure out here is that right balance, that right fairness. And I'm glad to be able to continue to work on that together with you. I just wanted to take a second here. If other committee members have an opening statement prepared, we would ask that they be submitted for the record. I'd like to just take a minute to explain the timing rules for you all. Each witness gets 5 minutes to testify, and the members get 5 minutes for questioning. There's a lighting system to assist you right in front of you. The green light will be on when you begin. Yellow light comes on when you have 1 minute remaining, and red light comes on when you're out of time. And we ask that you stay within that time frame to the best of your abilities. I'd now like to just introduce our witnesses here. Our first witness, Mr. Jamie Yesnowitz. Mr. Yesnowitz is a principal at Grant Thornton and also serves as the state and local tax practice and national tax office leader. He is a recognized leader in the state corporate income and sales tax legislation and policy, state tax conformity to federal tax provisions, and state corporate income tax apportionment rules. He holds an LLM in taxation and a JD from the University of Miami School of Law. Welcome. Thanks for coming. Our second witness is Ms. Linda Lester, and I would like to yield to my colleague, Representative Schneider, for this introduction.
Thank you, Chairman, and I want to welcome all the witnesses. I'm grateful you're here to share your stories. It's my great privilege and pleasure to introduce our next witness, Ms. Linda Lester, who lives in my district. Ms. Lester is the Vice President of K-Log, a family-owned business in Zion, Illinois that distributes quality, affordable commercial furniture across the country. I'm proud that K-Log and its 30 employees call Zion home. Linda holds a BA from the University of Illinois at Urbana-Champaign and has worked at K-Log for the last 10 years. Has been an invaluable resource for my office, in particular, in understanding the impact of the Wayfair decision that it has on real day-to-day businesses in our community and beyond. Linda, thank you for joining us today.
Great. Thank you. Welcome, Ms. Lester. Our third witness today is Mr. Kevin Mahoney. Mr. Mahoney is the founder and president of FindTape.com. FindTape.com is an e-commerce business that sells tape, glue, adhesives, and dispensers located in North Brunswick, New Jersey. Mr. Mahoney holds an MS in Information Systems from NYU Stern School of Business and a BS in Finance from Penn State. So welcome, Mr. Mahoney. I'd now like to yield to our ranking member, Mr. Hearn, to introduce our final witness.
And our final witness is Brad Scott. Mr. Scott is the financial director of Halstead Bead Incorporated, a jewelry component wholesale company located in Prescott, Arizona. With 30 employees, Halstead Bead is a second-generation family-owned small business that has been in operation since the early 1970s. With nearly 20 years of service at Halstead Bead, Mr. Scott directs the company's accounting operations and all tax matters. You're a busy man. Mr. Scott, we appreciate you taking the time away from your business, and thanks for coming today to talk to us.
Yeah, thank you so much. It's a real honor to have all of you here, and it means a lot that you came here to share your experience, your knowledge, and expertise with us. With that, why don't we jump right in? Mr. Yesnowitz, you're recognized for 5 minutes. Over to you.
Thank you. Chairman Kim, Ranking Member Hearn, members of the subcommittee, thank you for the opportunity to testify on behalf of the AICPA. In 2018, the Supreme Court expanded the state's right to require out-of-state sellers, commonly referred to as remote sellers, to collect and remit sales tax by modifying the long-standing nexus test. With this ruling, the court endorsed the South Dakota statute requiring remote sellers to register, collect, and remit sales tax if they meet at least one of two economic thresholds, either gross revenue from sales delivered into the state over $100,000 or engaging in at least 200 transactions involving items delivered into the state. So how have the states responded? As a whole, they responded quickly, but not consistently. About half the states adopted the same economic thresholds as South Dakota. The other half adopted variations, such as different sales thresholds or requiring that both the transaction and sales thresholds are met. And in at least one state, the rules apply once the first sale is made to an in-state customer. There's also a lack of uniformity in determining how and when the economic thresholds apply. For example, some states count only taxable sales while others use gross sales. So how does this impact small businesses? Businesses that traditionally maintained a physical footprint in just one or two states now must consider whether their sales to customers in a national marketplace subject them to the new rules. Nexus standards, threshold calculations, rate determinations, and filing compliance are only some of the burdens on remote businesses, and especially small businesses, that do not have the resources, revenue, or time to accurately comply with the various rules across the nation. There are also situations where businesses have to register even when their sales are tax exempt and file $0 tax returns. In that case, a business spends time complying with the law even though the state will not get any additional revenue. Similar problems arise when states use a threshold based on the number of transactions. For example, a business selling a product valued at $10 to 200 customers with an 8% sales tax must collect and remit a grand total of $160. The compliance cost clearly exceeds this amount. Taken as a whole, there are often prohibitive costs attached to ensuring that the compliance is performed correctly. If left unchecked, the lack of uniformity in which the states have reacted could impair small business growth, result in a loss in productivity, and hamper their accountants' ability to efficiently and effectively serve them. So how can we help small businesses? If Congress decides to address these small business issues, we have a few suggestions. To start, small businesses need more consistency between sales and income tax nexus rules. Businesses are faced with a challenge when it comes to the question of nexus. Are they subject to sales tax, income tax, or both? The answer in many cases is unclear. While it is impossible to completely align all sales and income tax rules, it is possible for Congress to address the minimum standards for which these rules apply. A natural starting point is the standard established by the Multi-State Tax Commission back in 2002. It provides a safe harbor to determine if businesses are subject to business activity taxes. However, it's time to modernize the approach since the MTC has not changed the amounts for almost 20 years. We recommend a uniform three-part test. If you exceed one part, you have nexus in the state. First, for sales, there should be $1 threshold applicable for all of the states. The threshold should apply to taxable sales for the sales tax and gross sales for the income tax. The second part, for property located in the state, we would suggest a $100,000 threshold for sales and income tax. And finally, the third part, for payroll, we also suggest $100,000. There are several approaches to determining what is the right dollar threshold for sales. Some states use the $500,000 amount from the 2002 MTC standard. However, if inflation isn't taken into account, that amount would be roughly $750,000. Finally, a $1 million threshold would ensure that more small businesses are covered under a safe harbor. I don't have time to get into all of our other suggestions, but I want to note one area of growing concern. Small businesses selling both directly and through a marketplace facilitator must deal with even more complicated and inconsistent rules. In order to simplify compliance and avoid situations in which the double collection of sales tax may occur, businesses need consistent and clear definitions, including what constitutes a marketplace facilitator. Thank you for the opportunity to testify, and I am happy to answer any questions.
Great, thank you. Well, why don't we get through all the witnesses first? So, Ms. Lester, over to you for 5 minutes.
Good morning, Chairman Kim, Ranking Member Hearn, and distinguished members of the committee and staff. Thank you for inviting me to testify here today. My name is Linda Lester, and I'm the Vice President of K-Log, a family-owned business with 30 employees in Zion, Illinois. Our company sells furniture primarily to public agencies, the majority of which are tax exempt. Let me say right from the start, I am not opposed to collecting and remitting sales taxes in all states. My struggle is with the chaotic manner in which remote sales tax has been mandated, as well as the expense in time, money, and energy these mandates have imposed. I'm here today as someone who has actually gone through the process of registering for nationwide sales tax collection to try to convey to you just how difficult it really is. It has taken us a year to comply and register in 42 states, even though the majority of our sales are tax exempt. I estimate that we have spent well over 1,500 hours so far at the cost of $75,000. I've heard many times that there's a streamlined process with free software available to handle this. I'm here to tell you that it's not streamlined and it's not free. First of all, only 24 states have joined the Streamlined Sales Tax Coalition, where uniform standards have been set. The biggest states didn't join because they're too complex and couldn't meet the requirements. Secondly, while the streamlined states might pay for the filing fees, they do not pay for the cost of tying the software into our systems, exemption certificate collection, training our staff, nor reconciling data. All of these expenses are much higher than the minuscule filing fees paid by the states. Here's the bottom line. If compliance were as easy as just implementing free software, I wouldn't be here today. If it were easy, Illinois would have far more than only 5,000 or so remote sellers currently collecting and remitting to the Illinois Department of Revenue. Let that sink in. Out of the 30 million businesses in the U.S., only 5,000 have registered as a remote seller in Illinois. I did a FOIA request for that one. That tells me that there are a lot of businesses nationwide struggling to comply. I know very small businesses in compliance. Some are still unaware, and when I discuss it, they look at me like I'm crazy or just plain wrong, while others are trying to comply and failing miserably. The majority, it seems, are hoping that they can keep under the radar and wait it out until the federal government steps in and comes up with a comprehensive solution, because this simply can't be the way things will be from now on. I fear that when all the states start notifying businesses that they owe thousands of dollars for taxes on past sales that they never collected in the first place, companies will start shutting down and jobs will be lost, all because of a tax due that they didn't even know about in the first place. This is already happening to Fulfilled by Amazon sellers. I'm here today to ask for your help in bringing order to the marketplace, but I'm not the only one asking. The state legislatures of Arizona and New Hampshire have both passed resolutions asking the federal government to help with this. When I first spoke to congressional staffers about this in October of 2018, I felt like the canary in the coal mine trying to warn of impending doom. While people listened sympathetically, the universal support that I had hoped for just wasn't there, but it is now. We need a simple, straightforward system that will not impose an undue burden on businesses, leading to increased compliance and thus increased revenue to the states. Any proposed solution for remote sales tax collection must include one rate per state, a single filing point for all states, time to implement free of penalties, and a comprehensive program to educate businesses and consumers of the change. I have some ideas on how to make this happen, and I'm hoping that now is the time to bring everyone to the table to start working on sensible solutions to this complex problem. There's far more to this than I can cover in just 5 minutes, but I'm going to give you just a few of the complexities while time permits. Colorado's sales tax form. 2,000 pages. Did I have to file one? We had to compose a sales tax exemption booklet that's 248 pages long that has all the exemption certificates from all of the states. Connecticut has 43 different tax exemption certificates, so we have to look up on every transaction which one applies to this specific customer and make sure we got the right one. While Alabama collects local sales tax for its counties and cities, a remote seller is required to register for accounts with the state, plus 4 different private collection agencies and over 100 self-administered counties and cities. And now, when I thought I was finally compliant, having registered in the 42 states where we have Nexus, I'm starting to realize that we have to address a franchise tax in Texas, a gross receipts tax in Ohio, an income tax in Pennsylvania, and I don't know how many other tax obligations the states are demanding. I'm asking, no, begging you to please work with me and the others here to pass legislation that will fix this before more companies go out of business and people lose their jobs. Thank you.
Thank you. No, I appreciate your testimony there, and helps me. I was wondering what those binders were about, so it's good to see in person. I wasn't sure if it was a revised testimony or something.
I mailed them. I didn't bring them on the plane.
But thanks for bringing those in. Mr. Mahoney, over to you for 5 minutes.
Good morning. My name is Kevin Mahoney, and I want to start off by saying what an honor it is to be given this opportunity to testify at today's hearing. I am the president and founder of FindTape.com, a specialty retailer founded in 2004. Including myself, we have 8 full-time employees and are based out of Montgomery Township, New Jersey. Our company sells tape, glue, and dispensers throughout the U.S., and we currently ship to over 50 countries worldwide. Besides our website, we also sell on marketplaces such as Amazon, Walmart, eBay, and Newegg. After the Wayfair decision, many felt that compliant for small businesses like mine would be made relatively easy by using software to handle this new burden or by selling through a marketplace like Amazon. I am here to tell you that my experience has been anything but easy. In reference to selling on marketplaces, we are currently undergoing an audit by the state of Washington. The state's claim is that because Amazon transshipped our products between their own interstate warehouses, the transshipping gave us physical nexus, even though we never shipped anything directly into an Amazon fulfillment center in the state. Washington State retroactively claimed sales taxes from the prior 5 years, going back to 2013. Back in 2013, Fine Tape was only a two-person company who never shipped direct into one of Amazon's Washington fulfillment centers, but they still came after us. If you look at Washington State's own law regarding consignees, it fits Amazon's FBA, or Fulfilled by Amazon program, to a T. Amazon solely controls the entire buying experience, yet Washington State is claiming we meet the old-school definition of quill, or physical nexus, even though we did not transfer the goods or make the sale ourselves. This has been going on for over a year, and we have not received back our final assessment. Since their sales tax rate can be as high as 10.4% in some localities, the assessment will most likely be in the tens of thousands of dollars. Washington State has now even created a remote seller relief program, which we signed up for because they say they will waive penalties and interest. This program must have been created because there's a plethora of other small businesses like ours that they're retroactively going after. If we get assessed at the full amount, we may have to lay off some personnel, unfortunately. Many states now have marketplace facilitator laws in place, which require marketplaces such as Amazon to collect and remit sales taxes directly to the state. However, the economic nexus laws do not provide any clarity if companies like mine are able to use a separate threshold for our direct orders. Rather, they get lumped in with the orders that marketplaces are facilitating tax collection on. And from a volume perspective, Amazon currently makes up about 90% of the orders we get. Fine Tape sells adhesive tape, not high-end jewelry or electronics. When we sell 200 of our best-selling item on the Amazon Marketplace, we make roughly $140 in profit. Because of the 90-10 split between Amazon and our website, those additional 20 FineTape.com transactions would have brought in an extra $28 in profit. Therefore, for a total of $169 in profit, we have now hit the economic nexus threshold of 200 transactions and would be required to file in the state. Just to be clear, we're not underestimating our transaction numbers. If we look at all non-marketplace orders in 2019, we had 15 transactions in Wyoming, 21 in South Dakota, and 35 in West Virginia. We use the services of a company called TaxJar to calculate our sales taxes owed and to file and remit into the state. We pay them just over $2,100 per year to get access to these services. Primarily, the service allows us to request rates on which of the 10,000 plus taxing jurisdictions the customer is shipping into. We also pay TaxJar $20 per state filing they make for us. So if we're in a month when we have to file all 30 returns, since Wayfair we are now currently registered and collecting taxes in 30 states, that additional cost for the month is $600. While those costs are an issue, the bigger challenge is the time it takes me to reconcile the filings, plus I have to go through the daily correspondence of sales tax-related letters we receive from the states. It is incredibly stressful to open up your mail and see a stack of letters from a state you have no real presence in. This all typically takes me 1 to 2 days per month. As a small business owner, my scarcest resource is time. Even if economic nexus thresholds are altered to something more reasonable, at the end of the day, they end up being irrelevant since states like Washington and Massachusetts are going after Amazon FBA sellers for having physical, not economic nexus. All states already have the ability to enact marketplace facilitator laws, which would allow them to receive tax dollars for the majority of online orders anyway. Back in 2018, Amazon already had a 49% share of the U.S. e-commerce market, and if you threw in eBay and Walmart into the mix, that would have gotten states up to a 60% share. We opened our first brick-and-mortar store in 2019 in New Jersey. I understand how hard it is to compete with the likes of Amazon and Walmart, and it would not be fair for brick-and-mortar retailers to have to collect sales tax while an online order company would not. But when someone comes into my store, I don't have to ask them which of the 10,000 plus taxing jurisdictions they live in. Plus, I get the benefit of police and fire protection, roads are plowed and repaired, good schools exist to supply talented employees, and so forth from the taxes I am paying. If the local portion of the state sales tax rate could be eliminated for online sellers, that would greatly simplify things. Thank you for your time, and I look forward to your questions.
Thank you for your testimony there. Mr. Scott, we're going to turn to you now. You're recognized for 5 minutes.
Chairman Kim, Ranking Member Hearn, and members of the committee, thank you for inviting me to testify. My name is Brad Scott, and I am the finance director at my wife's family-owned small business, Halstead Bead. My wife, Hillary, is the president of the company. To date, our small business has spent more than $183,000 to collect less than $80,000 in sales tax. Breaking that down, we are spending $2.31 for every dollar we collect. We have diverted more than 3,800 hours away from our business operations to act as unpaid surrogate staff to 30 departments of revenue where we are currently filing. If we fail to deliver, the consequences are grave. Halstead is a second-generation, privately owned, small wholesale business that was started in the early 70s by my wife's parents. Over the years, their two-person side hustle has grown to the team of 27 employees we have now. Today, 94% of our sales originate from our website. We distribute raw materials and supplies to silver jewelers around the world. Our clients include the smallest micro-businesses selling through sites like Etsy, as well as traditional brick-and-mortar jewelry retailers. We have spent decades developing an independent website and IT infrastructure to maintain full control over our business model. We do not sell on any marketplace facilitator websites because we are unwilling to pay their commissions or cede control of our operational independence. Prior to the Wayfair decision, we had no sales tax software in place. Through our experience, we see 4 key issues to address, which I have detailed in my written testimony. Registration and filing, which is the obvious hurdle. Software requirements, which are the misunderstood hurdle. Exemption certificate management, which is the unknown and underestimated hurdle. And finally, the unprecedented liability and lack to due process. The Wayfair decision is often described as a court case aimed at major online retailers, but that is misleading. The majority of states are using gross sales as their threshold metric. This encompasses all forms of businesses across state lines, not just internet retail activity. What's more, in 2018, Wayfair, the defendant in the case, reported approximately $6.8 billion in revenue. They are more than 1,000 times bigger than us. A company like Wayfair has the resources to staff a state and local tax department. We are trying to navigate this new landscape with a single accountant. The expectation is that one person can bring a company into compliance as effectively as an entire SALT department at a major corporation. I am that one person, and I can tell you, it is not possible. The sales tax solution that is so often discussed was and is not free. There were substantial integration costs, and there are monthly filing transactions for non-streamlined states. The software is also inadequate. In 2019 alone, I received 36 notices from 12 streamlined states that the filings and/or remittances that our certified software provider is contracted to submit on our behalf were in fact not submitted. It took months to get these addressed, though some are still not fully resolved. One cannot stress enough the anxiety caused by receiving one notice from a Department of Revenue, let alone 36. One of those notices, from the state of Tennessee, was over $38.22 in penalties and interest due to a failure to report by our software company. In February, concurrent memorials passed through both the Arizona House and Senate with unanimous approval. These memorials are entitled, "Urging the United States Congress to enact uniform national legislation for remote sellers to collect and remit sales taxes." We are grateful to our state's elected officials for recognizing the challenges facing constituent small businesses and for making this formal request for federal intervention. At Halstead, we have a successful, profitable small business. We have prospered in our 47 years, but nothing has shaken us like Wayfair. We have considered closing our doors because of the stress and liability. We could literally lose everything. We urgently need federal intervention. In our opinion, there are 2 suggestions that stand above the rest. First, due process is beyond our reach because of the Tax Anti-Injunction Act. Allow a small business to use their home state's court system or federal courts to fight assessments. And second, a single statewide remote seller sales tax rate should be the standard. Penny parity causes unnecessary complexity and burden. Our written statement includes additional recommendations. We ask the subcommittee to please elevate this issue to legislation for uniformity to relieve this tremendous burden on small businesses. Thank you, and I look forward to taking your questions.
Thank you, Mr. Scott. Your testimony is very strong, and as you're talking about having to even make that, even that thought of having to close the doors because of this type of problem, that's exactly why we're here today and trying to figure out what we can do to provide relief and consistency to across the board. I'm going to start by just jumping in with a few questions here. Most states have adopted that similar economic nexus levels following the Wayfair decision, where businesses reaching certain revenue levels or numbers of transactions in a given state are subject to tax collection by that state. Each of you have run through that in terms of how it has affected you or other businesses that you know. I want to sort of establish a sort of a baseline across the board, so I'd love to go across the panel here and just get your sort of baseline assessment here. Do you think that the most common standard of the 100,000 in sales and 200 in transaction is reasonable standard? And if not, what do you think would be a reasonable threshold? Just so that we have sort of clarity across all four of you. Mr. Yasnowitz, why don't we start with you and then we'll move down the line.
Sure. As noted in the testimony, the $100,000 and 200 transaction thresholds that were adopted by South Dakota, adopted by about half the states, the AICPA doesn't think that that would be a sufficient level. The Multi-State Tax Commission set forth the $500,000 sales standard for factor presence nexus. I believe they used the $50,000 standard for payroll or property. So if you had a little bit of physical presence in the state, that would be protected. I think with the new economy and over the past 20 years, changes in the pricing and the like, we think that from the perspective of sales, $500,000 might not be sufficient to protect the small businesses out there, and so we've suggested as possibilities a $750,000 standard or a $1 million standard to cover even more small businesses, and to increase the payroll and property factor, or the payroll and property levels from $50,000 to $100,000 each.
Okay, great. Ms. Lester, what are your thoughts on this?
I have kind of a different approach to this, and in that I think it's complicated and hard to do whether you're a $10 million company or a $100 million company. We sell furniture, office furniture. We sell and school furniture. We sell stuff like this here, as well as cafeteria furniture in a school. So we may have one transaction of cafeteria furniture into Nebraska, and it's a $40,000 sale. So I think it's kind of misleading to just go on numbers. We may have 2 or 3 sales into one state and we hit the nexus just because of the nature of our transaction. What I really think we need to do, as long as you're asking, is make this simple enough that a nexus is irrelevant. If you have one rate per state and one place to file, then anybody can do this, and you could do this with no nexus. It just as in now, I know that my Illinois rate is 7%. If I had a list that here's the 50 states and here's their rates and you pay it here, you wouldn't even have to mess with a nexus. Everybody would know what to do. But if I had to answer your question and I have to set a nexus level, I would agree that $1 million sounds like the minimum it should be. If you're going to go through all this, you have to have a substantial amount of business into that state to make it worthwhile.
Okay.
That would be my opinion.
Thank you for that. Mr. Mahoney, where's your head on this?
I think, number one, having a number of transactions threshold should be eliminated. What primarily sells online are inexpensive goods, right? I mean, we sell adhesive tape. That's not expensive. I'm not going to make a lot of money selling 200. But for us, economic nexus really is irrelevant because the states are coming after us as an Amazon FBA seller for having physical nexus. I've had several conference calls with Washington State during the audit, and I've asked them, in the Wayfair ruling, I think it mentioned having substantial nexus. And when I bring that up, they say, well, we're not coming after you for economic nexus. Even if Amazon transshipped one item, that's now giving you physical nexus in the state. So for an Amazon FBA seller, the economic nexus thresholds aren't really relevant. And if you look, Amazon's 49% of U.S. e-commerce in 2018, and that number's just growing. So there's a lot of Amazon FBA sellers out there.
Mr. Scott, over to you.
Thank you. So based on the transactional threshold, I think those should be eliminated altogether. They make no sense based on small sales. If you want to talk about a threshold, I think the national threshold makes more sense than a state-by-state threshold. And going by the Small Business Administration's definition of what a retail small business is, $30 million and less is a small business. So if you're going to set a threshold, I think that's the starting point at the bare minimum. Or you could also use the threshold that South Dakota used, which is $100,000, and if adjusted for GDP across all the states, amounts to closer to $40 million. So a national exemption would make this simpler in the sense that instead of having to comply with states piecemeal, you either have to comply or you're under that threshold period, in which case you can focus on your business at hand.
Okay, great. Well, look, we'll likely have a couple rounds here of questions here, but I want to give the ranking member an opportunity. So, Mr. Hearn, over to you.
Thank you. Mr. Yasnowitz, you talked about the marketplace facilitator legislation. Could you walk us through how that works? I could ask Mr. Mahoney, but let's just go with you since you're on the tax side here.
Sure. With respect to marketplace facilitators, they're operators of online malls. They are intermediaries to transactions. They set up sellers and purchasers. So they're not a party to the transaction itself that's taking place, but they facilitate the transaction in one of several different ways. The states decided after Wayfair, and Wayfair did not address this fact pattern, but after Wayfair, the states acted with respect to remote seller legislation, and then with respect to marketplace facilitators, they required that if they have a little bit of economic presence in the jurisdiction, they were well placed enough to require the facilitator to collect and remit sales tax on, with respect to that transaction.
So they're supposed to be the one that identifies all these 10,000 different tax jurisdictions and collect the appropriate tax and then remit those back. And I think, Mr. Mahoney, you mentioned it was like a 90-10, 9%, or how do they get
For
paid?
our website, 90% of the volume of orders are on Amazon, and then just 10% on our website.
Okay. So how do these facilitators get paid for doing that service, or is it just part of their monthly marketplace fee?
There are a variety of different ways in which they get paid. There are some fee exchanges and the like. I think that from the perspective of marketplace facilitators that end up being, some of them are very large, sure, the Amazons of the world. But with respect to some, they're small businesses, and they may feel like they're doing a little bit of facilitation in some jurisdictions, and to be required to comply with all the states once they reach a minimal economic threshold, a couple of activities in each of these states seems somewhat onerous.
Mr. Mahoney, you mentioned 90-10. So I think what you were trying to describe or did describe earlier was the 90% that were sold through your marketplace would be charged at a gross rate currently because of the taxes applied locally through the marketplace. And the 10% would be some other price based on trying to determine what those taxes would be. So somebody buying from two different jurisdictions would say, why is this same product more expensive here at a retail price or at a sticker price, if you will, because the tax is included and the other side it's not? Is that?
Yeah, I mean, for us, if it's selling on the Amazon marketplace and it's a marketplace facilitated state, it's pretty easy. It just TaxJar just automatically imports those orders and remits, so we don't really have to worry about it. For us, for the 10% of orders that come on the findtape.com website, I use that TaxJar service, and it tells me, which of the 10,000 jurisdictions I'm shipping into, and it gives me the tax breakdown. And then we send that order to TaxJar, and at the end of the month they file it.
Okay.
So,
Mr. Scott, given that small businesses have limited resources and limited staff, knowing the rules of the road is paramount to growing, expanding, and creating jobs, do you believe that small businesses are aware of the rules and requirements on collecting and remitting sales tax, and what resources are available to help you better know?
Well, anecdotally speaking, in all of the companies that we've had conversations with surrounding sales tax, unless they're in this room currently, they're usually not aware, or they are aware, but they're also aware of how expensive it is to comply and the fact that they're so far behind the starting date at this point in time. They're unwilling to put themselves out there, because when you do register, if you're delayed at your registration point, you typically get a call from that Department of Revenue expecting an immediate audit.
So you say people, if they know and they're learning as we go along here, that they just say, catch me if you can, basically.
I don't think it's catch me if you can so much as this is a hurdle that there is no way for us to realistically get over. And so what we're hoping for is that Congress will act and force some degree of uniformity and protections for small businesses, so that when we do come forward in good faith, because most of us do, that we're not going to be punished just because of a court decision that happened 2 years ago that we weren't made aware of until potentially 3 hours ago.
Yeah. Yeah, so it does create the problem we have here with the federal government interacting with states, right? I mean, I get it. Obviously, as you heard me say in my introduction, the federal government trying to identify a single tax per state for all. I mean, I get the ease of that, but that would be a statewide sales tax, right? But every jurisdiction inside the state also has a particular county tax or city tax. It also has to be collected somehow or the other if it's sold within a metropolitan area. I'll get that on the second round because I have some more clarity I want to talk to you about, Ms. Lester.
Yeah, we want to make sure we kind of dive into this. So, Mr. Mahoney, I wanted to return to you. In your opening statement, you were talking about sort of the issues with Nexus that you had with Washington State, and I thought that was very powerful just to hear how difficult that was. I wanted to ask you if you have had any other states contacted you about additional Nexus. I'm just curious, beyond Washington State, in terms of the difficulties that was provided, have you experienced that elsewhere as well?
Yeah, right now, the only audit we've had is Washington State. We have received letters. Arizona has sent us a letter. We actually received a letter from California, but we registered back in 2009, so they just had our account number wrong. So they thought we weren't paying, but we've been paying for a while. But we tried to, in good faith, as soon as Wayfair got announced, we went from collecting in 5 states to 30, pretty much right at the end of 2018. So I feel like, the companies that tried to do the right thing and immediately collected, we have this burden on us, and there's a lot of companies that just aren't aware of it, the competition, and they're not incurring the same costs we are.
Yeah. Mr. Scott, I wanted to just get your thoughts on this in terms of, states that have contacted you about Nexus. Just want to get your feel for this.
So the decision came down on June 21st, almost 2 years ago, and to date we have received a single notification from the state of Pennsylvania that we may have an obligation to collect and remit sales tax. Of the other 44 states and District of Columbia, nobody has ever reached out to us. I should say 43 because we already knew about Arizona. What's more, we also are now aware that we have a top-line tax requirement with some of these states. California has a franchise tax, and Washington has a business and occupation tax. We voluntarily disclosed that we were unaware of those, and were assessed back taxes in those regards as well.
Okay. Wanted to turn over to Ms. Lester. I wanted to ask you a question just from your own experiences. What states are the easiest to comply with and why? And what states would you say are the most difficult to comply with and why? I just want to sort of set the boundaries, left and right limits here.
It's a great question. It's hard to keep them all straight, so I'm going to refer to my notes here.
Sure.
Indiana, Kentucky, Michigan, New Jersey, and Rhode Island get high marks, in my opinion, but I think it's more important to focus on why they get high marks, and that's because they have one rate per state, and there's an easy filing form. The other two that I would say that we found to be helpful is Texas and Louisiana both take a unique approach in that they are complicated states. However, they allow remote sellers the option of doing one rate per state. When you register that with them, you get your choice. You can either do one rate per state, or you can follow all the jurisdictions for a remote seller. Louisiana calls it...
That was Texas and which?
Louisiana. Louisiana calls it their direct marketer form. So if I was selling a type of a product that had a lower tax rate than the statewide they presented, then I can maybe choose to do that for my customers, or I can choose the other one. So that was a good approach, in my opinion. As far as the worst, Colorado, that's 1 month's form. They require you to submit it electronically for obvious reasons. I printed it just to bring it here today to show you. All the rest of the states are right here. This is all the rest of the states we do. I would say that Colorado's problem is that they have 682 taxing jurisdictions that they collect on behalf of the local jurisdictions, and there's 3 pages for each one of those jurisdictions, which is why the book is so big. We had actually 4 sales into the state that month and had to produce a document this big. My concern with this is that our software generates the report, but I obviously can't read it to see if it's accurate. I have to sign off on a report, then I can proof the total, but I can't go through it. Some of the other complicated states are all the ones that have lots of taxing jurisdictions. Alabama requires us to file 2 forms, Alabama state form and a local tax form. And on the local tax form, the first time we didn't know that we had to file it. We had 0 taxes due, and they assessed us a $100 penalty for not filing our 0 tax report because we didn't know we had to do it. And then the following month, once we did do it, we realized we had to get tax ID numbers for about half of the local jurisdictions. You had to contact someone else to get your tax ID number because they didn't use the state one. It's insane what they do. The bottom line is 1 rate per state with an easy filing form is not too much to ask because a lot of states already do it.
Yeah. Thanks for that. I still have a few more questions, but I'm going to turn it over to the ranking member for his second round.
Actually, I'm just going to continue on.
Yeah.
Went down the same line of thinking. I appreciate what you said about having no thresholds, because my experience is anytime any government applies a threshold to anything, there's always gaming of that system. And sometimes it's not good. Curtailing growth of a small business. When we could talk about the Affordable Care Act on small business, not going beyond 49 employees. The list goes on. It is a truth that is out there. Anytime you put a threshold, people will figure out how to stay under that. Even going to the extent of creating another business with dissimilar ownership so that you can stay under that. It's just a fact. I mean, that's what business people do. They figure out how to make the most amount of money out of the current law. You tell me the rules, I'll play the game. So I appreciate you saying that. That's a true entrepreneur that understands that that's not. I understand what you're saying about the one rate. I do want to ask you that because I appreciate you pointing out that 2 states do that, or maybe more, but you specifically called out Texas and Louisiana. Why do you think they do that? Have one rate. You have the ability, the option, the choice as a business person doing business in their state to either go through and fill out all the forms or just do one rate. And I'm assuming the one rate is encapsulating all of the rates, the highest rates, and they distribute those to the local municipalities where you do business in those states. Why do you think those 2 states do that?
I don't know. I didn't ask them, but my assumption would be because it's an easy way for people to then comply. I will say that Mr. Scott and I met in November at a similar forum, and I asked him, what state do you think is the most complicated? And he said one of his most complicated was Louisiana. And I said, oh, really? Did you know they have the direct marketer form that you can pay one rate? And he said, no, I didn't know that. So even when it's simple, not everybody knows that the options are available. We had several states where we filed and we had to redo it a different way. So I can only assume it's because they feel that, well, I'll get more people to comply.
Or encourage you to do more business there because it's easier to do business there, possibly.
Possibly. In our case, we mail catalogs. We sell office and school furniture, and we mail catalogs all over the country. So we do business in every state. We actually cater to governments, so we mail to the Department of Revenue in every state, which is one of the other reasons why we have now signed up in every state.
Because just for the record, and I think someone said it, just for the record, nobody that's in business is opposed to collecting tax and remitting tax to the proper jurisdiction. It's
my
just
opinion.
the complications that are required to do that, and the risk that you have if you miss. Like you said, just not even. And trust me,
Absolutely.
I've been where you've been, and it is extraordinarily frustrating. I didn't know you anything, but now I do.
Well, and we had 6 states where we did not meet the $100,000 threshold, but some of the states say as soon as you meet the threshold, that month you have to register. There's a few states, and I'm sorry I can't name which one, says on the day you meet threshold you have to register. So we thought, am I going to have to like every week say, did I meet the threshold yet? Did I meet it yet? Did I meet it yet? So to me it was, if I was going to do 36 states, I might as well do 42 and be done with registering everywhere.
Not that I'm proposing this, but would an acceptable solution be that encouraging states to have a single tax that encapsulates all of their tax due, whether it's franchise tax, income tax, whatever it may be, sales tax, a singular rate? Do you think that would be acceptable to online retailers?
I would not go there. I don't feel that, in Texas, for example, has set us that we have to pay a franchise tax, and it's probably going to cost us $2,000 to $3,000 this year. We have no employees there, no assets there, no nothing there, other than our customers happen to reside there, and yet we'd be subject to all these other taxes. I'm also concerned that once we get one tax, they're going to throw other ones in too. I personally believe that sales tax makes sense. The customer's there, it's a sale. That's the only thing that's happening there in that state. So yes, I'll collect the sales tax on your behalf and I'll send it. But having to answer to all of these other taxes, it doesn't make sense.
Mr. Chairman, I yield back.
I wanted to turn to Mr. Yesnowitz for a question here. Even though this hearing's been focused in on sales taxes, are there now income tax implications as well from states that small firms must worry about? I want to just get your thoughts on this.
There definitely are, because of the fact that when Wayfair came out Wayfair required all these new businesses to come into the state for sales tax purposes. It does not prevent the states from reaching back and looking to see, well, have you done stuff in the state in the past that would require you to pay corporate income taxes? And so we've already seen some activity in that area where states are now more interested in the income tax. There are a few jurisdictions in 2019 that decided to throw on an economic nexus threshold for purposes of their corporate income taxes. And so that's definitely a level of concern. In addition, with respect to looking at financial statements, that you have to make adjustments with respect to corporate income tax liability, things that change. And so when a company recognizes that, well, they were in a state and they really, from an economic nexus threshold, they were in a state, and it didn't matter that they just had that they didn't have physical presence. Companies have to reevaluate that from a financial statement perspective, and so we, as the accounting firms, have certainly had to deal with that.
Okay.
We paid over $5,000 in income tax in California just last year. Last time we shipped direct into a California Amazon warehouse was probably over 3 years ago. So we pay income tax. I have no presence in that state. I can't vote in that state. I mean, taxation without representation. You know, I'm paying income tax in a state. I don't even have any presence there. So
Yeah. No, thanks for that. Actually, I'd like to stay with you, Mr. Mahoney. When I was going through your testimony, the written testimony, you mentioned the marketplace facilitator laws. Are the states that have marketplace facilitator laws in place easier to sell in, file with, or pay taxes in?
you know, for us, it doesn't really make a difference. I mean, one thing, when we collect sales tax, the other thing I don't think we mentioned, you know, we have to, it's a credit card fee. So I'm losing 2.5% to 3.5% if it's an Amex card right off the bat on that. One thing I like with Marketplace Facilitated, when Amazon's collecting, at least I'm not losing, you know, the credit card swipe fee. But at the end of the day, it doesn't really make that much of a difference for us.
And Mr. Scott, I wanted to turn to you. What resources have you used to, you know, work your way through this? And in particular, was the Small Business Administration helpful at all? Just trying to get a sense of what tools are and what approaches you've taken through this.
Well, I mentioned earlier in my testimony that we've spent more than 3,800 hours on this, and a lot of that has been time by my wife, the president of the company, and myself, plowing through different Departments of Revenue's websites, trying to understand the legalese, the threshold terminology, and the requirements that have been put on us in the last year and a half. So are there any resources? Not really. There are places where you can get little bits of information here and there that span more than a few states, but by and large, most of our research has been from the Departments of Revenue's websites themselves, primarily because the information changes with such regularity that looking at an online resource is collecting all of that information, in our opinion, isn't really fully trustworthy, and maybe that's not fair, but in a sense of, you know, just being overly concerned about our own liability, we prefer to see these things for ourselves. With the Small Business Administration, this isn't really something that's under their purview as of right now. The Office of Advocacy has been helping us to a degree in the sense that they are letting us know that, yeah, things are moving forward in slow, methodical ways, but they're an office of resources financially or of statistics, but not with assistance as far as determining what we can do with the states.
Mr. Mahoney, just going off of what you were talking about earlier, I just wanted to kind of clarify, does Amazon collect the local tax, and if not, you know, what has been your experience through that process?
Yeah, no, Amazon typically collects both the state and local. Sometimes there's issues. I think Illinois this last month, there was a Amazon. Actually, I've received several emails from Amazon. They didn't calculate, and Linda may know more about what changed in Illinois, but they only sent the state taxes in and didn't calculate on the local. So it was a lot of back and forth, and then they sent a correction email out. So there was some complexity, but typically they collect all sales taxes for us.
Ms. Lester, did you have anything you wanted to add to this?
We don't sell on Amazon, so this is not first-hand experience, but 2 weeks ago, my accountant called me and said, I have a customer who sells on Amazon, and since you know so much about this, maybe you can help. Apparently, what Amazon does is it collects the 6.25% state tax, but does not collect the local tax in Illinois, which is another, for where I am, another 0.75%. And so my accountant was asking, what do we do with this extra, how do we collect this extra money? Amazon didn't collect it from the customer, but we know we still owe it. I don't even know how to report it on the form. Amazon has sent a notice to its sellers in Illinois telling them, we don't do the local tax. Sorry, we'll get to it. At some point, hopefully, we'll have it solved. I actually reached out to the tax authority at the Illinois Chamber of Commerce, asking them what to do, and he said that's not right. And he contacted Amazon directly and came back and said, "Yeah, you're right. They don't do it, and we're stuck right now." So,
Thanks for sharing that. I wanted to turn it back to the ranking member.
Yeah, just a question for you, Ms. Lester, just as a point of clarity. I was asking council this, and we're not sure of the answer. You have a book there, I think you said it was 182 taxing jurisdictions in Colorado?
actually, it's 682.
682. Okay,
Times
it's
3
even-
pages each.
So question for you, if you, and you may not know this answer, but it's something that we need to find out the answer to. If you are an online retailer in Denver and you sell across the state, inside the state, so you're required as that retailer in the state to collect the state, the city, or each one of those jurisdictions and remit to each jurisdiction within the state.
Well, 682 of them, you just file with the state, and the state does it on their behalf, okay? However, the form is 3 pages for each jurisdiction, so it is only 1 point. But I will say, there's an additional 97 jurisdictions that the state doesn't do on their behalf. And you would have to register with each one of those individually and do them. Denver is one of them, as well as Colorado Springs. So for those, I have to check every month and say, did we hit Denver yet, a nexus? We're kind of up in the air, to be honest with you, of what we're supposed to do with the other 97 jurisdictions. It's bad enough dealing with this one.
But it does create a little bit of an awkward scenario for us as far as authority from the federal government going inside of a state and telling a state how they're to collect their own taxes in their own state when the business resides in the state. And this is sort of the predicament we're in. That's why we're here collecting a lot of information from you all and to get a better understanding of how this process is going to have to work going forward. Mr. Scott, I can see you're wanting to say something so badly.
Yes, sir, thank you. Colorado is a special state. We are a wholesaler predominantly.
Some would agree with you, yeah.
Right. We're a wholesaler predominantly, and there are reasons why we do collect retail sales tax on some transactions, but if you look at the nature of our sales, we are a wholesaler. And Colorado is a state where we have prohibited any sales into the state that are not wholesale, meaning we have to have an exemption certificate for them. And we are also limiting sales into that state to stay below threshold because we do not want to run afoul of their Department of Revenue.
Okay. Mr. Mahoney, did you want to say something on that or no? Okay.
Fine with
Mr.
Colorado.
Yesnes, what's your thoughts on that, being in the tax business?
Well, I mean, with regard to states and localities and the federal government being able to intervene, the federal government does have the ability to do that. They've acted in the area of corporate income tax. For example, 60 years ago, you had Public Law 86272, and that protects companies that do limited solicitation activities within a state from taxation if they're selling tangible personal property to take the orders outside the state. So the government has acted in the past. So understanding that there's a sensitivity to trying to deal with a state issue here, I think Congress does have that power. With respect to this particular issue, I think that Congress needs to be concerned about the fact that in the 18 months since Wayfair, you have all these states acting independently in a non-uniform manner, and it makes it really difficult for small businesses like these to be able to handle all that in such a short period of time. And that's why the AICPA is recommending some level of uniformity here.
So is the AICPA also recognizing of states' ability to claw back use tax when individuals go to states that have a lower use tax and buy high-ticket items and take them back to their state, and then the state goes after these particular individuals from circumventing use laws?
Well, the AICPA wants compliance.
Okay.
They understand the fact that the use tax is an important component of the sales
Okay.
tax. I know that we had a recent experience where my daughter wanted to buy something online, state of Maryland. The company was based out in California and really wanted it, and bought it and no sales tax applied to it. I'm like, you realize what I have to do now? And she said, what do I have to do? Like, well, we got to pay the use tax on this, clearly. I'm not going to get myself into trouble over it. So she didn't get it, but a lot of people don't. And understandably, the states really do need to do more in the area of use tax enforcement. They put line items on the income tax returns for folks to self-report. But yes, there is a tax gap there. I understand that.
Any thoughts? I mean, I know this is not your area because you're more of policy than you are in the competitive world. Do you see any states that would take this as an opportunity, especially higher populated states that would take this as an opportunity to make this more compliant, easy, if you will, so that online retailers would do business in their state more regularly than elsewhere?
I'm not sure from a competitiveness standpoint that one state would go over another. I know that some of the states have applied these new economic thresholds using a market threshold. For example, South Dakota is a much smaller market than California, so California is putting in a higher standard than South Dakota. So we're seeing some of that. The advantage there is, well, for small businesses, it's much easier to trip a threshold in a big market state if everything were the same. From the simplicity standpoint, it's a little bit difficult when you got to deal with all these different numbers, and using a market amount for that might be problematic.
Mr. Chairman, I thank all the witnesses for, obviously, they've done a lot of work in this area. It's near and dear. That's where you get your best thinking from the people who are actually experiencing the issues. I appreciate your time being away from your businesses and from what you do, and thanks for giving us suggestions of what to look at here so we can work on that as we go forward. And Mr. Chairman, I would yield back my time, except I have none. So thank you.
I just want to echo what the ranking member just said. As we've gone through a number of different hearings over the time, to just continue to have small business owners and experts and others take time to be able to come to our humble chamber here and talk to us about what it is that we can try to do to help small businesses. It really means a lot. The stories you have told are not just compelling in terms of the facts, in terms of the numbers and the information, the recommendations, but we can really see it in each of you, just the frustrations that you've had, but the real passion that you bring to try to get this done, to try to have something that's going to be fair for small businesses. So, I just wanted to say, thank you for taking time out of your busy schedules to come. As we start out at the beginning of this hearing, we said that one way for Congress is to support small businesses through well-conceived and targeted tax policy. As we heard today, small businesses need tax policy that is simple and certain, not ever-changing. Small businesses also need tax policy that levels the playing field and creates opportunities for their businesses to thrive. Following the Wayfair decision, many small businesses are facing compliance costs and burdens that are hurting their businesses' abilities to succeed. This is calls upon Congress to try to take steps to think through this thoughtfully and try to find some solutions to these problems that you have presented to us today. I look forward to working with my members on both sides of the aisle to solve these issues for America's small businesses. With that, I would ask unanimous consent that members have 5 legislative days to submit statements and supporting material for the record. And without objection, so ordered. And if there is no further business to come before the subcommittee, we are adjourned. Thank you so much. Thank you. Yeah, thank you.
What do you think? What do you guys think?
Relatively painless. Didn't thought there'd be more questions, but I guess only a couple members.
Well, I know that my member, there's a Ways and Means Committee with forgot who it is, on the budget, He said I gotta go to that.
Thank you all so much. Really appreciate it. I know it's a tough situation. We got to figure out what we're going to do there. It's not going to go away on its own.
Yeah.
Appreciate it. What did you think? This is my first first time doing this, so I don't know if this is normal or if this is. Before I forget. I don't know if anybody else also. Before I duck out.
Oh, thank you so much.
I really appreciate. Yeah, and I really appreciate. I was nervous, and you really put me at ease, so I appreciate that. Yeah, and I think I have a meeting with you tomorrow.
Did you really haul this all by yourself?
No, I shipped it to someone here in Washington who brought it in, but yeah, it's and that's actually double-sided. I was going to do it. That's double.